Hello and welcome to the GTR East Africa 2020 Summary Webinar. I'm Ted George, founder and chief narrative officer of Kleos Advisory. Normally, I would be chairing this event in Nairobi, but these are not normal times. Owing to COVID-19, the GTR East Africa conference has been postponed. Instead, we are holding this summary webinar to bring together some of our best speakers to discuss the key issues facing trade in East Africa and how everyone is coping with the crisis. But have no fear, the GTR East Africa conference will go ahead this year on the 1st and 2nd of October, so put the date in your diary. Well, our webinar is divided into 3 sections, followed by a Q&A. First, we're going to have an overview of the East African market. Then we're going to look at agribusiness and commodity trade finance, and then moving on to trade digitalization. We will then finish with a general Q&A with all of our panelists who will be available to answer your questions. So let's get started. We are in the middle of an unprecedented crisis. COVID-19 is literally the ultimate black swan event. The whole world has been impacted. We are practically all in lockdown. The economic impact has been nothing short of catastrophic. And wherever you look, we are breaking records, and unfortunately for the wrong reasons. The World Bank expects $1.5 trillion to be shaved off world GDP this year. The US stock market has lost nearly 3 years of gains in just a couple of weeks. The WTO expects world trade to fall by a third. Comparisons have been made with the Great Recession, even the Great Depression of the 1930s. And there are some markets which are facing a double whammy, notably the oil producers with a slump in global demand and oil prices. In April, next month oil futures actually went negative for the first time ever, which means that suppliers actually paid buyers to take the oil off their hands. And for developing markets, which are heavily dependent on oil exports or other commodities, the fiscal impact has been shocking. What is needed to get through this crisis are cool heads and smart thinking, which is why we're very lucky to have for our first panel to discuss the overview of East Africa, Duarte Pedreira, Head of Trade Finance, Crown Agents Bank, and Barnabas Kalenzi, Head of Business Intelligence, Bank of Kigali. So Duarte, Barnes, over to you.
Thank you very much.
Thank you, Ted.
George. It's great to be here, and I concur that being perhaps at the Radisson Blu in Nairobi would have been a better prospect. But I guess better times will come. My name is Duarte Pedreira. I'm the head of Frontier and Emerging Markets for Crown Agents Bank, alongside trade finance as well as a product. And I'm also a board member of the global trade finance industry body, the ITFA. Like Ted said, the idea is that over the next 15 minutes or so, we will go on sort of an in-depth discussion as much as possible on the situation in East Africa caused by COVID, and of course with a particular focus on the economic impact, and then drilling down into the banking industry and trade finance in particular. For that, I'm absolutely delighted to have my dearest friend Barnabas Kalenzi with me. Barnabas has got one of the most interesting job titles I've ever seen in the world of banking. I've personally had the opportunity to tell him that is the equivalent to the CIA in the banking world, is head of business intelligence. But Barnabas is absolutely an institution, not only in Rwanda but in East Africa. I normally say that if there's a businessman out there in the region that doesn't know Barnabas, then maybe he should think about reaching out and making contact, because it's obviously out of the decision-making loop. Barnabas was previously with EcoBank in Rwanda, and has had a very successful career in banking. So I'll deliver a short introduction that won't differ too much from Ted George's one, and then Barnabas and myself will go into a bit more of a drill-down discussion with a focus on Rwanda. So we all know that COVID-19 is basically spreading chaos across the globe, unfortunately. And we also know that the vast majority of countries have put in place very restrictive social distancing measures, which have been actively affecting output and the level of unemployment on a global scale. In Africa, at some point in the recent past, and admittedly countries are now easing their restrictive measures, but in Africa, we had over 50% of countries in full lockdown, and another, I think over 15 were in partial lockdown. But interestingly, if you look at the figures, and I was doing a bit of research, so this relates to figures at the end of the 3rd of March, sorry, the 3rd of May. The United States in itself had 1.2 million identified cases. The UK had 185,000, and Africa as a continent overall had little more than 43,000, with only 11 countries reporting over 1,000 cases, with South Africa being the most notable one at 7,200, give or take. Look, admittedly, there could be an element there of underreporting, and we all know that African countries would probably, and at least in theory, lack in terms of testing. But undoubtedly, there is a massive difference in numbers. Now, the problem is that Africa stands at least as much, if not more, to lose from the economic meltdown, we can call it that, that is already unfolding. And when I say that it's already unfolding, it's as true as the IMF already being out there with several rescue packages. We've seen over $3 billion, for example, for Nigeria, South Africa talking about 5 billion, and so on and so forth. And for starters, I mean, critical initiatives such as the Africa Continental Free Trade Agreement, which is perhaps the biggest economic opportunity for Africa and the world in terms of free trade at the moment. The initiative was already postponed past its intended set-off date of the 1st of July 2020. Now, drilling that into Rwanda, of course, my dear friend Barnabas's country, and also my country to a certain extent. For those of you who know me a little closer, I run a charity there. Rwanda is the current diamond of African development, undoubtedly. And the path for growth and development included local manufacturing, for example, of mobile phones, laptops, prepaid meters, and the list goes on, and a significant and ambitious program for infrastructure redevelopment. And on the 27th of April, President Paul Kagame came out and announced that Rwanda was seeking to postpone debt repayments for at least 2 years to deal with the economic fallout from the coronavirus pandemic. Now, if you told me that 3 months ago, I would absolutely not have believed you. I would have thought that, of course, force majeure and so on and so forth, but it's difficult times. So having set the tone, let's perhaps proceed to a more active discussion with Barnabas. And Barnabas, perhaps to start, tell us a little bit how the lockdown worked in Rwanda. I remember I was in transit to Rwanda, only a few hours away from boarding, when I had to then reroute to Dar es Salaam. And how has Bank of Kigali faced business continuity plans following the lockdown?
Thank you, Dwight, for your very glowing introduction. And I'm glad you got out safe and safe during the lockdown. Rwanda has had one of the most drastic lockdowns in the region. It was one of the first to implement a full lockdown 2 days after we got the first case. So hospitals were testing fully. We had borders shut down, the airport shut down, no flights in or out. We had a few days allocated for residents to come back, and they were put in a 14-day quarantine in one of the hotels that was paid for by the government. So I was very proud of how the government handled it. And public gatherings were banned, churches, weddings, burials, a lot of specifications were put on social distancing. Banks especially had only to allow essential staff coming in, serving customers, but general movement in the country was really advised against. When that had to happen, we had the police creating some innovation around apps where you could ask for permission to leave your house for specific purposes like shopping. Markets were open, but observing social distancing mechanisms as well, going to banks and accessing health services. So until this past week, we were experiencing that, but we are now under partial lockdown. Essential movement is allowed during the day until 8 p.m., where curfew is observed. Uganda has a similar lockdown process. Kenya wasn't really that aggressive, but they applied the curfew. And of course, as you know, Tanzania didn't really do anything with regards to the curfew, and that is reflected in the number of cases. So Rwanda's cases were below 100 for long until we started getting cases from the borders. The borders were being allowed to let in cargo, and especially the Tanzania border, which is Rusumo, ended up seeing a lot of cases in terms of truckers and their assistance. So we saw the impact of the Tanzanian treatment of the COVID. So it was unfortunate, but we are still positive and watching the space to see how the impact of the partial lockdown affects the spread of the virus. Of course, there's always the scare of a second wave. If you know about the Spanish flu, you know that the second wave came in much tougher, especially around August. So we are trying to monitor and ensure this doesn't happen. Right. Business continuity with the banks and the banking sector at large, Bank of Kigali inclusive, we saw a very large digital uptake. So this is a blessing in disguise. A lot of people applied for mobile banking, internet banking, and we saw a lot of transactions between the teleco wallets, which we refer to as push-pull, and then few people still continued going to the banks, but many banks, especially, for example, Bank of Kigali, put 1 meter markers to allow people to still queue up for banking services. The essential services kept going to the office. You would see the IT tellers, but we tried to make 50% in the office and 50% offsite. We saw emergence of online meetings. Zoom, Microsoft Teams became a household item for many people, and this, I believe, will affect the future on how we interact. So that's it. We remain hopeful, and we are still observing to see how the spread is cut down.
It's very interesting. I agree with you 100%. I think I was always a big fan of remote working. Of course, not full time, but you know, at least a day or so a week. And it's encouraging to see how you guys have deployed these measures. Perhaps just to drill in a little bit on the trade side, finance side, what's the impact? Is anyone lending in the market? What do you think will happen in terms of trade finance going forward? How long will it take for us to recover some lending volume?
So Q1 figures reflected a slight reduction year quarter on quarter between 2019 and 2020. But of course, it had a very small portion of the lockdown. Q2 is going to see a more adverse impact on the reduced lending. Of course, a lot of trade in the region is informal trade, which isn't really impacted by banking, but banks are definitely watching the situation, staying closer to clients. Clients are not really requesting for more facilities per se. They're kind of requesting for restructures and small working capital needs to enable them continue paying salaries, and a lot of importations have gone down. As you know, China is one of our biggest importing countries and development partners. So trade between China and the region has gone down approximately 20%. We are still seeing some exports happening, especially of horticultural products to Europe and agricultural products. But of course, this is going to be heavily impacted. So trade lending is not really happening at the moment.
Yes,
People are still
everybody seems to be on lending lockdown, if I can call it that.
And lockdown lending.
Yeah, exactly, and also perhaps worryingly, because of the lessons of 2008, international banks are also very cautious, and cautious is a euphemism, I guess. But how do you think that international banks kind of retrenching again, being afraid of capital stress testing and so on, will impact the potential market revival in terms of trade finance in Rwanda and East Africa?
Yeah, so far we haven't seen a very huge impact on the liquidity of banks. Banks are still being able to maintain a good level of liquidity, a good level of capital adequacy is also being maintained. We don't really have to depend so much on the international banks. Lending is being done in local currency, so it's better to fund that with the local currency. But should the need arise for funding from international banks, we have some that still have appetite. You'll see Afrexim, for example, who are one of the sponsors of this platform we are discussing, have allocated about $3 billion to help financial institutions survive during this period. Yes. So we are not really worried in terms of funding. Funding will still continue being done locally, and should the need arise, we have facilities from the likes of Afrexim, FDB to come in and assist.
And assist. Thank you so much, Barnabas, and over to you.
Thank you, Duarte. Over to you, Ted.
Thank you very much, Duarte and Barnes. Greatly appreciated. I wish we had more time, but maybe this is something people watching can follow up with both of you afterwards. So let's now move on to a topic which is close to my heart, namely agribusiness and commodity financing. East Africa is a soft commodities giant. It is the continent's largest exporter of cut flowers, of coffee, of tea, of cashew nuts. It's also a major importer of foodstuffs, a food processing hub, and a food distribution hub. And this makes the region's value chains very vulnerable to the impact of COVID-19, which is disrupting both international exports, but also intra-regional flows. So to discuss how East Africa's agribusiness sector is responding to this crisis, we have two panelists. Susan Aburi, Head of Financial Relationships at Tradable House Africa. Many of you will know Susan from her previous work with EcoBank and Stand Chart in Kenya. And Grace Muraga, Senior Relationship Manager for Banks and DFIs at Rand Merchant Bank, also based in Nairobi. Susan, Grace, thanks for joining us.
So, thank you very much for having us.
Great. So let's get started. Agriculture employs most of East Africa's population, and goods move through a vast human value chain. How have COVID-19 and the curfew affected food distribution? Who would like to start?
All right, I'll take the first question. So
as Barnabas indicated, the East African communities are on various states of lockdown. And in Kenya, for instance, we have a soft lockdown, I'd like to call it, where there's just a dusk to dawn curfew. So there is free movement of people during the day. And in terms of commodities and food distribution, that has been categorized as an essential service, and therefore, transport of food and essential services is allowed. I think for me, the question around the impact of COVID is on the affordability. I think availability of food is there. The question is whether the workforce or the economy can be able to continue affording to purchase the various commodities. For various reasons that we've seen, people being laid off or the informal sector not being able to go back to the workforce. So people are cutting back in terms of their demand for food and agricultural commodities.
Thank you. And Susan, your views?
Yes, just to add on to what Grace has mentioned, food distribution has been affected grossly because, to give an example, in Kenya, the key counties, that is Nairobi and Mombasa, who take most of the food that is produced in the country, are on lockdown. Much as food is being allowed in, it's restricted how it's coming in. So while before you could, come in and go as you please, it's a challenge there. We are a hub that produces a lot for the European market, for example. So apart from local distribution being affected, we have cargo planes. Yes, cargo is being allowed, but it's restricted. So we have horticultural produce that is not able to leave the country, for example. So food, I see a lot of challenges there. If you're trying to take food into East Africa, we have Tanzania that has no strict measures towards the COVID. We have our neighbor Uganda that's being very strict. So how do you have food moving through impacted? The distribution, of course, then gets to be very challenged because you don't get food going as fast as it could,
Yeah.
When there was free, the borders were open.
Sorry, I'd just like to ask about horticultural goods as well. That's one of the big areas that Kenya managed to develop in recent years. Most of the roses that are on sale in the UK come from Kenya, or at least used to come from Kenya. But I've seen on television pictures of them destroying roses because they literally can't export them. How is the market being affected at the moment, that vital one?
It's hugely affected because you have a bumper harvest, you have contracts that you're already in place. Many of these flower farms have very huge facilities. They have very huge workforce. We've already seen many of them laying off workforce. So you have a big economic impact there. Banks have committed to try and restructure their facilities. But bottom line, the impact is huge. It's just not the companies, it's even counties that are affected, and the whole economy is affected by this current measures because the exports, even the country's export earnings have dropped drastically as a result.
Yeah, thank you. Grace, do you want to add anything there?
So, Susan is right. The horticulture sector accounts for, a huge chunk of, for instance, Kenya's export earnings. And we've seen the Dutch auction has slowed down in terms of getting, orders in. In terms of the tea sector, we saw the Mombasa auction temporarily halt the auction because of having to put in place measures to ensure social distancing and all. And conversely, we've had a bumper harvest in terms of the tea sector. So we have a lot of supply, but demand is muted. So I think it's a difficult period for these sectors, especially given that we rely a lot on them for our export earnings. And I think for financiers, these are the sectors that we truly need to protect and safeguard and support during this season.
Mm.
Thank you. Well, that leads us very nice to the next question. One of the big problems that happens in any crisis is a liquidity crunch. In fact, you could say that's the only reason banks actually exist. Trade finance at its very heart is about providing liquidity short-term to traders. How bad is the liquidity crunch at the moment in East Africa? Which are the businesses that are suffering, and are there any which are managing okay? Maybe Susan, if you want to start.
As traders, speaking for where we are right now, it's a big impact because most of the currency that is understood in trade is foreign currency, mainly the US dollar. And given the current scenario where it's a global pandemic, even America is holding, the dollars that they have in circulation. So like USD liquidity has been hit hard. We have seen facilities being priced way out of the norm. Our bankers are not just for traders, but across the industry, we've seen foreign currency facilities being repriced. Speaking for our business, most of our transactions are usually in dollar or euro, and we're having to look at structuring our facilities in euro, which is a more stable currency right now, because there's very tight liquidity. The effect of the tight liquidity is the pricing being a bit too high.
Yeah. And Grace, your views?
Yeah, so very similar to Susan. I think this is a time banks are looking to show up capital, to show up liquidity. No one is really extending themselves in terms of funding. Banks are being very selective in terms of who they're extending foreign currency liquidity, especially. And if you look at agribusiness, commodity business, it's foreign currency liquidity that's in the market. So on the local currency side, we haven't seen much of a contraction in terms of availment of facilities because, well, there's also a lack of demand. But I think this is where multinational and multilateral DFIs need to come in. And we've seen the likes of Afrexim and AFDB, CDC coming in to support sectors that are particularly under strain because of COVID-19. So this is a time for financiers and DFIs to come together and bridge that liquidity gap where we've been looking to offshore banks to support local economies.
Yeah, thanks. I fully agree. I think definitely now is the time for cooperation. I know that Eric will be speaking a bit later about Patinfa, which is the Afrexim Bank $3 billion facility for finance, but there's a number of other ones out there we'll touch on later. Well, this brings me to another point here, which is about crises. Crises are a time for innovation. Necessity is, after all, the mother of invention. Which companies or startups have you seen that are innovating their way out of the crisis? Any particular innovation which seems a useful way of trying to get around these problems? Susan?
Exciting that you say that, because you're right. During crisis, you can either cave in or come up with some innovative way of doing business. We have seen a lot of uptake on online media, so online shopping, everything online now. I think even banking for those customers who are not embraced it fully, they've gone fully online. For our business, the challenge also for traders is how do you get some of the things that you're used to do so physically going online? But speaking on a basic level, we have seen very innovative things like in Kenya, where we have a company like Twiga. Twiga has a partnership with quite a number of farmers in the country. And it speaks to our earlier point on food distribution. So they have a partnership that they have done with one of the online platform companies, Jumuia, and they are delivering food to our homes at a for $20, you get, or $20 to $30, you get a good package delivered to your doorstep. So these are some of the initiatives we're seeing where people are stepping out and saying, you know what, in this crisis, what can you do to meet? Because there's still a need. People are home, they still need to eat. Life is still going on as it can. So yeah, in the transport sector, I hear the innovative things coming through. So I think that's what is key. Trying to make sure you can still do business in this sector, in this period.
Yeah, and I think what's so great as well is that Africans are among the greatest entrepreneurs and innovators that are out there. So I would expect to see the solutions coming in. Grace, what innovations have you been seeing in the market to try and get around these problems?
Quite a lot. We've seen, social media take up a lot of the marketing initiatives that customers are looking at. I'm on various WhatsApp groups that have become marketplaces. So people go in there and say, I'm selling, I have a farm, I'm selling eggs, I'm selling local produce. Can I deliver to your doorstep? So we are seeing a lot of that, even in the estate WhatsApp groups, people are forming those. They're becoming marketplaces as such, Facebook, Instagram, Twitter as well. So the idea is just to bridge the gap between the client coming to you and getting the goods to them. So it's as simple as using whatever social media platform that you have accessible to you.
And lastly, if I may mention, we've seen the M-Pesa Visa partnership, which speaks to, again, another innovation that comes in perfectly. Two financial houses coming together, to kind of give the customer more options to do business. So yes, exciting times.
Absolutely. And of course, I mean, WhatsApp has become almost the key means of communication for Africa. When I try and get in touch with anyone in Kenya, if I WhatsApp them, I get an answer in a second. If I send them an email or I try some other way, I may never hear from them again. So it makes sense that should be used. There have also, we must remember that the EAC is made up of several countries in the region, and they've all had different reactions to the virus. We've already heard about the slight difference between Tanzania and Kenya. When you're looking at it from your side, which governments in East Africa do you think are best handling this situation and helping reduce the impact on the agricultural sector? Maybe Grace, if you want to go first here.
Sure. I think the response from the governments can be looked at in how fast or how quickly they went into lockdown and what measures they put in place. So we saw Rwanda was very quick out of the gate to lock down the country. But in terms of that, they also provided, food parcels to the communities as well. So I think that's one of the governments that we can call out and say, they're doing a good job. Back home here in Kenya, there's a COVID emergency response fund that was created by the government and brought together various private sector players where, they're collecting or collating food distribution and, cash donations as well from companies. So I think it's varying across the East African states. We've seen Tanzania is coming up a little bit and Uganda as well, but I think Kenya and Rwanda were quite quick to come up with response mechanisms to support especially the vulnerable during this period.
Thanks, Grace. And Susan?
I agree with Grace fully. We've seen Uganda and Rwanda, who had early exposure to Ebola, respond better during this period. I think these are the countries we didn't quite have experience handling Ebola, and we've seen that adding value to this particular period. The country which everyone has concern about right now is Tanzania, because again, free movement of goods and persons has been a big thing within East Africa. So when one country doesn't have a semblance of measures that the other countries have, it gets to be a point of concern.
Absolutely, and we'll be coming back to this issue of free movement of goods in EAC in the Q&A right at the end. So we have time for just one more question I'd like to ask you. And this is really looking at this issue that because nowadays we're at a time of disrupted imports, costly imports, the focus is shifting once more to the need for manufacturing and value addition in Africa. How do you think, or do you think COVID will accelerate or hinder this process of value addition in Africa? Maybe Grace, if you'd like to start.
It has to accelerate, and we have to use this as an advantage to us. I think it's almost timelessly. And if I was the CS or Cabinet Secretary of Trade and Industrialization, I wouldn't be sleeping, because this is my time to really, get in and promote the local sectors, the local industries. We've seen how quickly we've been able to produce masks, for instance, and PPE equipment and, sanitizers, breweries. So I think this is a time for governments to look inwardly, to focus on import substitution, the things that we were bringing in or importing, what can be produced. Kenya, for instance, was importing fish from China, whereas we have a very huge Lake Victoria here. So I think this is a time for governments to look inwardly and look at the sectors that we can support locally and look at value addition and value creation across the food chain.
Thank you.
I agree with you, Grace. Yeah.
Sorry. Go ahead, Susan. If you anything else to add on that front in terms of speeding up industrialization?
I just agree with Grace. Just in terms of the governments, if they could do more for the agricultural sector to kind of like put up support for their sector across the countries. So like if it's tomato farmers, for example, instead of it being small to holder scale, let's have something national where the government comes in and maybe puts up a body that facilitates processing of the same. So instead of us buying canned tomatoes from other countries, we can do more of our own. Can we find a way to process our food better? Can we grow we have one of the best internet hubs in the country, in the region. What more can we have our innovators come up with? What other conducive environments or triggers do we need from the government to facilitate more of that? We have learning institutions doing a lot. So yeah, it's exciting times indeed.
Sure. I think also the other thing to bear in mind is the other hidden benefit of East Africa, which is that across the area, particularly in Kenya, there is a wonderful distribution network. If somebody can produce something in Kenya, the people exist, you can spread it across the whole of the region. So it makes sense to be producing more there. Well, that's all we have time for on our agriculture panel. I'd like to thank Susan and Grace for your insights there. If you have any questions for Susan or Grace, please post them on the Q&A part of the webinar, and we'll pick them up at the end of this. So, without further ado, I'd like to move on to our last session of individual discussion, which is about the digitalization of trade finance. So, if I could, excuse me a second. Yes, so if I could invite my panelist to join the call, or to stick on your... fantastic, thanks very much. So, yes, I'd like to welcome the co-founder of Orbit Capital, Lanre Olininyi, to discuss this issue. We are looking at trade finance, and the fact is that the digitalization of trade finance has been going at a dizzying pace in recent years. We have seen a whole new range of technologies come onto the field, which broadly fit under the category of trade tech. These include digital documentation and payments, IoT applications for goods moving through the value chain, particularly CMAs and logistics companies use these, and of course, blockchain solutions for key things like KYC, AML, and traceability. So let's start with a bit of a helicopter view, if we can. Lanre, what is the state of trade tech in East Africa at the moment? Who would be the key players, and what are the key countries and regulators who are most open to this kind of technology?
Thanks, Ted, and morning, afternoon, everyone. I think, as you rightly said, the trade tech case for trade tech in East Africa is still in its early days, as you would appreciate. Even in more developed markets such as Europe and Asia, the discussion around the role of trade tech in facilitating trade finance transactions, or its place at all in trade finance ecosystem, is still in evolutionary stage. So when you then look at East Africa, what we've seen is still that it's still very early stage. Of course, it's not to say you don't have a number of players out there in the market already, particularly in Kenya, where you have the likes of Innovate, who are focusing on supply chain finance solutions. And then you have the likes of Bikimbi, who are looking at sort of, distributed ledger solutions for the ecosystem, but it's still early days. If you then zoom out and you look at sort of Africa, the continent at large, you still, there are a number of players who are, coming up and trying to figure out which part of the vertical within the trade finance ecosystem lends itself best to digitization. Country-wise, needless to say, Kenya still leads the pack out there, obviously for similar reasons that Grace mentioned earlier, which is basically, the internet penetration in Kenya, the innovation hubs out there, and of course, the well-advanced ecosystem in terms of the financial services and banks out there. But with regulators, definitely there's still, regulators as always tend to come late to the party. We've not seen quite a lot of regulatory activity or regulators even participating in the conversation just yet. But, you would expect that, regulators do come, take this opportunity that we have right now to actually stimulate, as opposed to be hindrance, to stimulate a lot of innovation within trade tech in East Africa.
That's great. Thanks, Lanre. Yes, I think it's most interesting when you look at the potential for trade tech and you see the openness of certain governments. Certainly Kenya has been leading the way. They led the way when it came to mobile telecoms innovation in the late 90s. Then, of course, with the introduction of M-Pesa as well in 2007. But you could argue that perhaps in Kenya, they're so protective now of M-Pesa that they may be slightly not as open as they were to innovation before. I think also I would personally like to make a shout out to Rwanda again. They've been so open in terms of wanting to engage with innovators and invite them to their country. I remember a couple of years ago when I was speaking to the head of the Rwanda Development Board, that when I asked him what is the key focus of or your objective for tech in Rwanda, he said, we want to be the proof of concept country, i.e. come prove your concept in our country and then scale it elsewhere. And that struck me as incredibly open. But there are one or two other governments, which we maybe won't mention in East Africa, which are not very open when it comes to anything which is seen as foreign interference. So I think there is certainly a mix there.
Sure.
But now let's actually look at some of the specific things that can be done with trade tech, because they bring real tangible benefits, and one or two of them which we could really do with now during the COVID crisis. They've often talked about the fact that trade tech can remove these long-standing blockages, but maybe they've been overhyped, or have they not? So let's look at three areas, and I think the first one, the richest one, is in this whole issue of KYC and AML. The whole issue of proving who you are, of proving you're not a fraud, and of enabling all the checks and balances to be in place so that payments can occur. How is trade tech helping in that area in East Africa?
No, sure. I think that's definitely is, one of the cornerstones in terms of issues within Africa, and obviously East Africa, but the continent at large in terms of KYC and AML. The amount of energy, time, and cost that goes into proving who you are across the continent, and East Africa in particular, it still remains a big challenge and a blockage to trade finance, or companies being able to access trade finance quite easily. If you look at the African Development Bank report, I think about 2 years ago, KYC, access to KYC accounts for about 30% of denials of trade finance funding to corporates across the region. So that remains a key issue. But as we've seen, I think we've mentioned Afrexim a number of times here. They are actually sort of participating in finding solutions to this. So they've got the MANSA program, or the MANSA platform, which is basically our Africa-wide KYC repository that they are developing. And the whole idea there is, hopefully, technology companies or tech companies and even banks can plug into that and use it as a verification basis for, doing their due diligence or initial due diligence on corporates they're looking at.
Mm-hmm. Yeah, and that makes sense. Pooling KYC resources makes sense. There's obviously difficulty here because one bank's KYC is not the same as another bank's KYC in terms of processes, but it's about the information underlying that. Absolutely. Another key issue here is to do with documentation, exchange of documentation. One of the first things I ever learned about trade finance is, strangely, it's not about finance and it's not actually about the goods. It's about documents. If you have the right document, if you have the right LC and it's all correct, the money goes to the bank account. If you have the right bill of lading, you get the goods. And if you don't have the right documents, nothing happens. And very often agricultural goods sit in the sun and rot. So how is trade tech helping with this very important area of documentation, where there needs to be the absolute level of trust and certainty that there is no fraud?
Well, that's actually, good question, Ted. And that's the one that, sort of boggles my mind the most when you think about, as you rightly said, the fact that trade finance, the bedrock of it really is about documentation. And on the other hand, you look at, distributed ledger technology, essentially blockchain. That's essentially, what the technology does, which is basically the streamlining of, document processing and also verification of those documents to sort of remove frictions and obviously remove duplication and create trust within the process. I think whilst we see all of these technological improvements coming out, I'm also mindful of the fact that within the African context, there are a lot more granular issues that need to be sorted out before you sort of start to leapfrog into adopting sort of blockchain and all the DLT technology. But the technology definitely is out there. There are proven cases which we've seen, the likes of Marco Polo or WeTrade actually execute trades end to end without paperless trade. And obviously, I think this particular environment we find ourselves with the whole COVID lockdown probably lends itself even better to prove the case that we need to be heading in that direction sooner rather than later, because as we had Grace and Susan say earlier, where ports are being jammed, people are not able to come to work, you can't exchange your documents, the DHLs and all of the document couriers are locked down. Does this not sort of further prove the need for fast tracking the adoption of these technologies to not only create efficiency, but also might just be the new way to work in the future. So yes, I think there is a lot of opportunity there for East Africa and Africa at large. But the foundation in terms of interoperability of various technologies needs to be thought about as well.
Absolutely. And I think it's still amazing that for most trade finance in the world, it's still ultimately finalized by two people exchanging a piece of paper. It's completely crazy. I mean, any piece of paper can be forged, and just as any digital signature can be forged as well, but that is something to do with the mental change. Okay, and then there's one final area of trade tech I'd like to look at you with as well, which is to do with credit scoring. Because I think in trade tech, this is something where you can meet a need which is not being met anywhere in the market. Maybe you'd like to unwrap that a bit.
No, absolutely. And I think for me, when you think about the KYC and AML, I think next in the pecking order that is credit scoring for Africa. Alluding to the same AFDB report, which, was quite an extensive report they produced about 2 years ago, 2018, 2019, and surveying, the banks and trade finance transactions across the continent. And again, the lack of, a score or sort of credit history, essentially, for corporates in Africa accounted for a significant percentage of, what we have sort of all come to know as this trade finance gap, i.e. companies seeking trade finance and not being able to access it. So there is a big opportunity there, both in terms of applying technology to solve this, and this is something we are looking closely into. But also the challenge is immense in terms of, where is there a central African repository of, companies' trade history? Where do you go to for various countries? And maybe the sort of the African Continental Trade Agreement might be one of, something that helps in this if the regulators also think about not just in terms of the free trade, but, what technology can we apply as their sort of continent-wide approach to gathering company information that then helps with credit scoring of these companies, and obviously then reduce the barriers to getting funding. Because you think about it, if you have the right amount of data and transaction history of a corporate, especially even the SMEs, then you'd expect that this would increase the amount of capital that is available to these companies because of their credit history. I mean, you look at us right now. You don't necessarily need to know a bank manager before you can apply for a loan, because your credit history, your credit score is there, and if you qualify, you get a loan. So I think the same logic definitely lends itself to the African continent and the businesses across the continent.
Yeah, absolutely. I mean, I fully agree. I think one of the most difficult things is actually being able to say, what is the creditworthiness of this company I've never heard of in Africa? It might be perfect, but if you don't have the information, you're stuck. How do you think that COVID, though, is affecting openness to adoption of this new kind of technology? I certainly know that COVID is forcing some digitalization, but is there a danger that because trade tech is, by its very nature, quite complicated, COVID could push it onto the back burner?
Well, I mean, we'll see how that's, we'll see what side of the divide that comes down to. I suspect, as we've seen in various conversations, digitization is rising to the top of the agenda of, everyone, from the banks to the trade finance lenders to the corporates. I don't think anyone could have predicted this scenario, the fact that we all just can get on a plane to go to any country we quite fancy to originate or to conduct business. And we've all seen how quickly, the companies that have built in digitization into their sort of day-to-day operations have coped and reacted better compared to those that essentially just thought the world would always be as it was in terms of traditional ways of doing business. So I'll be surprised if the current environment does not push digitization and even the adoption of trade tech to the forefront and potentially be the wave that trade tech companies ride into the next phase of whatever our work lives look like. And there's sufficient case studies for this when you look at the likes of what happened our Alibaba and the other tech companies in Asia, essentially on the back of various crises, became the go-to place for various solutions. So I'm quite optimistic that this would potentially be a boost for trade tech companies to prove their worth in the new world we're emerging into.
Absolutely. I'm going to agree with that. And also, this is what COVID is so good, an opportunity to get some people, some businesses to accept new practices, which frankly have been accepted for years, such as Zoom meetings, such as not having a meeting and put it all in an email, or remotely working, etc. So I would hope that as well. Well, we have time for one more question, and I'd just like to look at this issue, which is perhaps one of the biggest ones raised by COVID, and it is relative to any kind of tech, and it is this question of the digitalization of trust, digital trust. Simple question to you. Try and give us the simplest answer you can. But can digital trust really replace having a coffee with a client and shaking hands on a deal?
Yeah, that's always an interesting one, Ted. I mean, having a coffee with a client is always good, and it's good to sort of, have the personal feel and, touch of a client. But I go back to the mortgage example. It doesn't matter how much, coffee you have with your bank manager. If you're not creditworthy, you don't get the mortgage. Right, so it's as simple as that, and that's essentially the role of digitization. Is because the digitization of trust is about looking at what the data really says. What's the credit history of this company? What's the track record? What's the financial gearing of this company? All of those elements are what essentially factors into a credit decision process in terms of whether you're going to lend to this company or not. Right, obviously, I know we talked about this, you still need to go out there and kick the rocks, as they say, and do your due diligence. But, how much of your credit decision process is based on the softer things, right? And how much of it is actually based on the hard data that, technology can help us gain insights into a company's history, a company's financial strength and capabilities to pay. So I'm definitely on the side that, trust can be digitized. But it's not necessarily, it's not necessarily the case that, every decision process will need to be based on having a coffee with a client. But, I think digitization will play a key role in the future and how we make credit decisions.
Thanks. I think what's really interesting is we might find ourselves going through a kind of an opposite trust barrier than before. Very often you meet people, you get to know them, and then you do a lot of business digitally. We're going to be finding during the COVID crisis that people we actually started to bond with digitally, and then we meet them in person. Certainly the one thing I don't like is having a coffee and knowing that I'm the one who produces the coffee. Because
Absolutely, correct.
Right? I love the coffee in Kenya. Anyway, I'm afraid that's all we have time for. Thank you very much, Lanre. I appreciate your inputs. And to everyone watching the webinar, if you have any questions for Lanre or myself about trade tech, please submit them. We're going to be taking them in the final session. So we have come to the end of our key sessions, and we're now going to finish with a half an hour Q&A. We have a number of questions we're going to ask. We've already decided, but we are also selecting a number of questions that have been presented to us by the various people dining in on this call. In fact, we have 161 participants at the moment, which is very good indeed. So if I can invite my various panelists to please come onto the screen and unmute yourselves, and we will start with the final Q&A. So we have on our panel, we have Graham Bright, Head of Compliance and Operations at Euro Exim Bank. We have Chris Njogu from the Kenya Association of Manufacturers.
Good afternoon.
Afternoon. We have Patrick Macau, Head of Trade Finance for Kenya and East Africa at the Standard Chartered Bank.
Good afternoon, everyone.
Good afternoon. And we have Eric Intong, Senior Manager, FI Sovereigns and Corporates at Afrexim Bank.
Good afternoon, everyone.
Good afternoon. Thank you very much for joining us today. So why don't we get straight in there? COVID has exposed many weaknesses in East Africa's economy, and in fact, all of the economies of the world. So my question is, which countries are best prepared to manage this crisis and which are most at risk? Is East Africa as well prepared as West Africa, which had Ebola to deal with? Graham, do you want to kick off?
Yeah, I think from our perspective, again, we're one of the banks. We've talked just previously, we heard about documentation, about identity, we talked about trust. We also heard about some of the issues around the manufacturing capability and the ability to move manufacturing, be flexible, be very realistic and diverse in the way that things are happening. So from our perspective, I think we see that East Africa is an incredibly opportunistic set of countries there. There are some issues. There are, from the EAC point of view, there are landlocked countries. We know there's a transport problem. We know there's a distribution problem there. But from that point of view, I think COVID-19 still does represent a number of opportunities, definitely, for those who are willing and have the capability of fast reinvention of manufacturing capability. So where we see perhaps short-term PPE production, that's masks, gloves, etc., how quickly those institutions can retool afterwards to make them, again, more realistic and more favourable and competitive to outside markets. So I think, yes, there's a great opportunity still there.
Great, thank you, Graham. Joyce, your views, which countries do you think are best prepared to handle this one in East Africa?
Well, in East Africa, of course, many countries were already looking at robust industrialization policies. And within East Africa, our regional integration process has been quite strong amid a few challenges with non-tariff barriers. So I must say East Africa, of course, in my view, is better prepared with some of the economies really growing very fast in the last few years, and also really working on integrated policies to support SMEs, to support the supply chains, and also looking at strengthening their logistical support. And we've had a lot of support from development partners to improve logistics and efficiency, whether it's port entries, the airline systems, the rail systems. But again, there's the question around whether we've experienced such epidemics. I must say we haven't experienced them much. But when we look at the different countries in ESC, I believe, other than Tanzania, like it was said earlier, most of us are very quick in our response mechanism. Just as an example, Kenya quickly put together a business response team, and they were able to quickly come up with the policies and procedures of how to survive this period. Our only delay was on closing airlines, but it's because we were conscious of international relations, and we really wanted to delay that process. Thank you.
Absolutely. Thank you, Joyce. Patrick, your views on this question?
Yeah, thanks, Ted. So I think East Africa is quite resilient. And if you ask me, the companies and the countries that are going to get through better are those that are resilient and can leverage on agility to convert their basic commodities into finished goods. We're on a backdrop of an unprecedented pandemic. Other than the one or two guys from the UK who are last there in 1918, I highly doubt anyone on this call has lived through a pandemic before. I certainly haven't. So we have to give benefit that these are unprecedented times, but we have to give also benefit to innovators. We have to give benefit into how resilient and agile companies and individuals are demonstrating. It's important. We used to work from home maybe 1 or 2 times a week. Now, most of us are working from home on a permanent basis. We've seen oil manufacturing companies go into production of sanitizers instead of lubricants. We've seen manufacturing entities all of a sudden develop PPEs. So this tells me 2 things. This tells me that the industrialization levels are there. It tells me that the innovation levels are there. How do we harness them? Depends on our ability to thrive internally and depend on our own ecosystem more as opposed to looking outwards. So I think there is hope. I think there's a lot of resilience. And I think I have witnessed agility that I did not think of before. I have seen ventilators made out of wood as prototypes, and they work, and it's amazing.
Excellent. Thank you, Patrick. Very, very positive view there. And Eric, your views on this one?
Yeah, thank you, Ted. Actually, holistically speaking, East Africa is actually very well prepared to manage the crisis. On a country-by-country basis, you see early lockdown measures that were put in place by Rwanda, by Kenya, by Uganda. You see, so that the pandemic doesn't impact negatively all the previous plans that have been put in place. I was actually reading an article from the Washington Post that actually compared East Africa and their readiness versus the US. And the article was quite interesting and extracted 3 key points that the difference that the US should learn from East Africa is that there was an early response by the governments. And some of the presidents, like President Museveni of Uganda, actually led explaining how the virus is transmitted, and they proceeded to put lockdown measures in place. Other countries like Uganda, Rwanda, even South Sudan, Somalia, Eritrea were quite quick in putting lockdown measures in place when early few cases were identified in the country. Another point that was highlighted in that very interesting article was the East African nations learned from experience. You know, they've had other epidemics like cholera, influenza, and they didn't want to take chances. That's why they went very quickly, so that there's no more damage that is going to be negatively impact their plans that are put in place. The last very important point I want to highlight is that they also place emphasis on international cooperation. They got together as a region, spoke, and then decided to put in place a collective response, even though we've seen Tanzania not doing the same like the other countries. So I think that most of the countries in the region are better prepared to deal with the crisis.
Thanks very much. That's really positive from everyone. It just shows that East Africa very often shows agency in these things. It's not a victim. It knows how to respond with innovation. Let's also look onto this other issue about liquidity, because it is something which is going to be affecting everyone on both sides of the trades. A shortage of liquidity can often be fatal for businesses. Where do you see the key pain points and financing gaps at the moment with liquidity? Maybe Graham, you could start.
Yeah, well, let's have a look at an example of perhaps EAC and the countries that are involved there. I did a quick tally up there at the moment, and there are 130 banks who are representing the population for those particular countries. So of those 130, some are in development, providing development funding, some are community. So again, there's going to be a level of liquidity which would not particularly serve an exporter or a buyer in those countries, but look more at a domestic situation, and also microfinances as well. So there are opportunities, 3 different types there. But as you say, liquidity is a main issue, again, because the problem with dollars and foreign currency when you're doing any particular transactions with trade. But one of the things we have come across is, and it's one of the things we proport and obviously support as a bank, is using on-demand liquidity from Ripple. So we're not reliant on dollars in order to do a transaction, which means individual companies can pay in local currency and be paid in their local currency. And as was said before, if the price of getting foreign currency is so huge at the moment, so restrictive and making you uncompetitive, there need to be other channels to do this. And one of those channels is potentially Ripple to do that. That's using XRP as a digital asset underlying the 2 local currencies. That aside, we're still in a position where liquidity is very hard to come across. We know rates which are over 20, 25% if you're trying to get hold of particular dollars in certain countries, just makes it uneconomic. But I think what the international community need to understand is that the whole of the Africa region is a powerhouse for the future. And what's happening is that people are looking to perhaps say, I don't want to do business with China in future. We've got the capability more locally to find the resources we need to be able to then use that for manufacturing, for example. So can we find alternative sources of supply, origin of goods or resources, to make our manufacturing process cheaper locally, to sell to our neighbours locally? And if free trade agreements are in place, the movement and transport of those goods is going to be easier and cheaper and more competitive and more productive as well. And therefore help more people, hopefully raise them from in welfare levels as well.
Yeah, thank you, Graham. And I think that's a very nice segue, because I wanted to ask you, Joyce, as well. You work for the Kenya Association of Manufacturers. How are they dealing with the liquidity shortages, and where are the key pain points at the moment?
Thank you. I think currently liquidity was already a challenge even before COVID, I must say, and it was one of our priorities from last year and also early this year when we were really discussing liquidity challenges with government, the Central Bank of Kenya, and many others. And one of the issues before COVID really was things like prompt payment, unpaid bills, very poor payment culture in Kenya, so a lot of backlogs in unpaid bills. But when COVID came in, cost of manufacturing immediately went up because, of course, of a reliance on imports of raw materials and people hoarding that. So availability of raw materials became scarce and people started increasing costs and just trying to manage inventory. We also saw the reduced production, which again affected demand a little. And in the period of trying to define essential services and non-essential services, there was quite a commotion that then so that there were low productive times, especially when the curfews and the restrictions came along. You know, production hours went down, and so also production capacity went down. So all this, of course, led to reduced sales and companies having challenges with cash flows. And it's a rippling effect because, again, backlog of unpaid bills, unpaid salaries, and people being laid off. So a lot of people not also affording to purchase some of these things. So that rippling effect, of course, brought in liquidity challenges. And luckily, because of the rapid response team, the business response team, we were always in war rooms and situation rooms discussing with government and development partners and consultants on possible remedial actions. And as a result, we were very happy when the government of Kenya, of course, announced some of the areas that could, of course, unlock cash flow. I know most of you could have read already, like tax relief policies for those earning low, reduction of VAT by 2%, things like payee reduced and all that, just to increase liquidity in the market, and also the CBR rate going down. So a lot of things were put in place. I really don't need to talk much about them because they're in the public. And we are grateful to the banks also who responded immediately and said they can give payment holidays and they can negotiate with the customers. The banks that had good relationships with large industries, of course, have worked out good arrangements. The challenge is the small businesses. And these are not necessarily very unique because they were not very sustainable, a lot of them. So an epidemic like this, of course, exposes their weaknesses. And currently, there are many discussions with financial institutions on how to develop suitable products to support SMEs, especially those that were already doing well before the COVID crisis. Because you may decide to support those that just any SME for the sake of it and their business model was already dying. So that analysis of different types of businesses and how then you support those that have capacity to be sustainable post-COVID is another challenge that we are really discussing in the different situation rooms. Thank you.
Thank you, Joyce. Well, I think that leads on very well. I'd like to talk to the other two banks on here as well and ask them specifically about what you are doing to try and help your clients during this crisis, particularly the liquidity crunch. So maybe Patrick, if you want to tell us what Standard Chartered Bank is doing in East Africa.
Yeah, I'll just add it in addition to what Joyce has said. And starting off, normally on panels like this, banks take a lot of flack, but for one of the first few times I've had good appreciation for the bank. So thank you, Joyce. I think at Standard Chartered, I can break it down into two levels. I could break it down to what we're doing as a group and then what we're doing in country. Now, I know a lot of the times when we talk about what global banks are doing, we only think it happens in our main markets. But in this kind of pandemic and this scenario, what we're doing as Standard Chartered has implications across the group. So we announced, and it's public knowledge, we announced a COVID-19 fund worth $1 billion to support industries in the health sector producing PPEs, producing hygiene equipment and medical equipment to specifically have an impact in supporting communities during this very difficult time. To give you an illustration of how impactful that fund is, I think one of the first disbursements has been in Uganda of this $1 billion fund. And we are also looking at supporting transactions in Kenya and in the Middle East. It's important to note that we're very keen to support the businesses that actually drive the underlying economy. And at this particular time, the businesses that are at the forefront of this fight against this COVID pandemic. So that's one thing we're doing from a global perspective. Locally, the regulator has been very supportive. I think Joyce has provided some context into that. And as a bank, what the regulator has done, they've actually reduced the capital reserve ratio, what we call the CRR, by 1% from 5.25 to 4.25. The immediate impact of that is that it has allowed liquidity of a couple of billions across the industry, including Standard Chartered Bank, to be availed to companies that need this financing at this particular time. So together with the Kenya Bankers Association, we're working very closely with the central bank to make sure that the good businesses that Joyce was talking about actually do get the support. We have to be very clear and careful in noting that the underlying fundamentals of a good business and to support people producing PPEs, those in the medical industry, have to be sustainable over the long run. So we are working with the Central Bank and the Kenya Bankers Association as Stanchart to support guys through this additional relief on top of our business as usual relief. In addition, we've come to realize the strength of some of the propositions we had put in place as a bank. Some of our supply chain finance propositions are coming to bear fruit because we realize that the smaller SMEs do need the support and leveraging relationships of the bigger multinationals. So our supply chain finance propositions, which by the way are fully digital, are coming to support some of these smaller players at this particular time where we have seen what is a flight to digital in trade, which is very interesting because we've been very traditional, we've been very paper-based, but we are supporting clients with this flight to digital as well. So in a nutshell, we've provided emergency funding, we've restructured loans, we've provided loan extensions, we've provided new facilities, and we've provided transaction fee holidays and repayment holidays across the industry. But charity also begins at home. So we've also supported our staff and the KBA, the bankers in the KBA have supported the staff in their networks with PPEs, ability to provide the technology to work from home, and also supporting the communities around the banks, because without those communities, then we cannot be able to support our clients. So that in a nutshell, those are some of the things that we're doing as a Standard Chartered.
Thank you very much, Patrick. It's really good to see that banks are responding so forcefully. Maybe also, Eric, if you could just give us a quick view of what Patinfa is, which is being rolled out by Afreximbank.
Yeah, thank you very much, Ted. And Ted and Joyce, they've actually outlined a good number of things. As you know, African Export-Import Bank has a developmental mandate. So our view is to actually amplify the works that a lot of the banks are doing. So as a response, or maybe to backtrack a little bit, you asked a very important question earlier on, where the pain points are. The first thing is that you notice there's a liquidity squeeze, especially in foreign currency in Africa. The second thing is that the pricing has gone up very, very unusual. It's quite high. So that way, Afreximbank, sometime in March, I think March 22nd, our board approved a 3 billion pandemic trade impact mitigation facility, which we call PATINFA. This is a facility that is available to sovereigns, to central banks, to financial institutions, and to corporates to be able to provide them liquidity that will help them avert the impact of COVID-19. So far, so good. As I mentioned, this is a 3 billion bucket, but we've already disbursed 3.6 billion. So that means that we're looking to disburse another 2 billion by the end of June. And this is going to pump in liquidity to support the various beneficiaries, governments, FIs, central banks, and corporates. And this also has given us the opportunity to partner with UNECA to be able to provide specific tailor-made solution to corporates that are manufacturing COVID-related supplies like PPEs, ventilators, and so on, which will give them the liquidity to be able to respond to that. You will notice that the response is a facility that goes up to 3 years, but there are other initiatives that go longer, which exist with the existing product that Afreximbank offer. So we are working in combination with a lot of central banks where they partner with us to be able to see how they can amplify the use of the liquidity. That's why we think that even though the initial approval was 3 billion, we'll be able to disburse up to 6 to 7 billion. The very important point I would like to highlight is financial institutions, corporates, government should reach out to us to be able to understand the way we can partner to be able to fight this very, very unprecedented pandemic. Thank you.
That's great. Thank you very much, Eric. And it's very heartening to hear that there are so many different approaches going on here from all of our different panelists to deal with this liquidity crunch. I would like to just now open it up to some of the questions that have been submitted today so far. We don't have time. We're probably not going to have time to go through all the questions we want, but one of them is interesting. It says, what measures have various banks put in place to handle trade documents, especially in instances of full lockdown? Have we seen a rise of shipping guarantee requests? Would anyone like to ask that one?
Yes, let me take that one. So it's interesting. Some of the scenarios we're facing right now have been theoretical in nature. Just talking to some of my colleagues in the industry, we are facing challenges. You mentioned earlier that the conclusion of a trade involves a physical transfer of a document. So one of the challenges we're seeing right now is bills of lading cannot leave certain jurisdictions. I'll give you an example. In India, during the lockdown, the current lockdown, banking services have been declared essential services, but some of the corporates have not. So the bank is open, it can receive trade documents, but the customers cannot get to the banks to deliver the trade documents, and we have the ships docking at the port of Mombasa. So one of the things we have seen is requests for shipping guarantees, requests for, on the instruction side, like I said earlier, there's a flight to digital, so passing instructions to the bank through our online platforms. And also we've seen electronic transmission of certain documentation. But we do face a challenge in title documents like bills of lading. And I think this disruption, we've always talked about disruption of trade. I think this is the real disruption. We need to think about how many of us had really invoked or applied EUCP. What happened to the benefits of BPO that we talked about years back, or how can we leverage blockchain going forward? So yes, there have been challenges, but we're supporting our clients as Stanchart and across the industry to mitigate some of them. In shipping, it's through things like shipping guarantees.
Okay. Anyone else want to give a quick comment on that?
If I may just add to that, actually, what Patrick has highlighted is what we're also noticing at Afreximbank. There's a huge delay because of the lockdown. But what we are doing is to be able to give some accommodative timelines, extend the period within which those documents can be submitted. We leverage on the fact that being a self-regulated entity, we can consider certain considerations that are in line with our developmental mandate. That if you were supposed to provide the trade documents, because the delays are obvious, within say 30 days or within 15 days, we can accommodate up to an additional say 20 days or 40 days. And that has been working so far. But the point I agree with Patrick is that this is not sustainable. So we need to start thinking of ways of how to start accepting electronic documents, how we can verify and make sure that fraud is eliminated. I mean, that's what I can add on.
Sure. No, thank you very much. And it's interesting to see. I mean, there's a lot. I was recently involved in a podcast for the LMA, and there were lots of discussions there from different groups saying that they've basically been forced to accept digital documents. There's just simply no other way around it. And some of them are left scratching their heads whether this will really hold up in court. But then, of course, will anyone even be able to get into a court in order to this one? Maybe if we could have another question as well from the people watching today. What measures can traders take to bolster KYC and avert their exposure to risk, as it is getting more difficult to curb it each day? Anyone want to chip in on this?
Let me start with that one. You heard Larry earlier on mention today Mansa KYC platform that Afreximbank has developed. The platform is fully sponsored and developed by Afreximbank, and is open to financial institutions, corporates, and all African entities. But we are working in collaboration with central banks, which means when your KYC information is uploaded on that platform, the central bank or the regulator of that particular sector in which that entity plays verifies that. Then it comes to Afreximbank for a second verification. You did highlight at the beginning that Bank A's KYC policy is different from Bank B's KYC policy. But what this will help is it gives you at least a starting point for you to be able to do that. So we are actually looking towards leveraging on this African-wide MANSA KYC platform to be able to get Africa have its perception on trade change completely. Because what typically happens, especially in a moment of crisis like this, is that a lot of international banks that are not deep-rooted in Africa started pulling out, because bankers normally behave in a way that once there's risk, the first approach is to wait and see, slow down a little bit, and see how the situation is before they can start lending again. But at Afrexim Bank, we have a developmental mandate. We saw this gap, and we say we need to step in and provide support to all the financial institutions in light of KYC, in light of trade. That's why we are confirming LCs right now, especially to banks that don't have corresponding banking relationship because of increased KYC costs. You know, a bank will not continue to do business with you if the cost of KYC is say $10,000 and the revenues they're getting from you is $5,000. It doesn't make economic sense. The bank will pull out. But because we have that kind of mandate that goes beyond financing or is developmental, we step in to be able to provide this gap through the LC confirmation program, which we put in place, through the KYC MANSA platform, which we put in place, and through the patching file, which we put in place for short-term liquidity support.
That's great. Thank you, Eric. Anyone else want to comment? Joyce, did you want to say something?
Yes, it's quite interesting that the focus is on the bank side, and that's good. But also from the industry side, we have our own KYC challenges. Besides where we are looking for a good relationship with financiers, we have other people in the value chain. And our biggest challenge now is how to build new partnerships along the value chains and supply chains. We've seen that over-reliance on the Asian countries has put us into some high-risk perspective in terms of availability of raw materials and continuous supply of some of the products that would keep industries at maximum production or optimum production. So looking for new relationships in the supply chain as well as new customers, all that needs some very strong KYC. Some of the innovations happening now are online platforms for traceability and trying to improve on how people can then reach the direct producers. If it's, let's say, agro-processing sector, how to access direct producers and how to build more on standards and certifications so that the compliance around market requirements is high. And then, of course, reduce your risks. And of course, if the manufacturers don't strengthen that side of their value chain, they'll not be the best customers for the banks. So we invite the banks to work with us across these value chains so that as they do their KYC platforms, they are also supporting the entire ecosystem. Now that you're quite advanced with the money to develop these platforms, please work with also the industries so that we can be integrated. I like the idea of blockchains earlier and how to use the Internet of Things. We are looking at high-level automations now as the next big thing, just to make sure that we are as efficient as possible with competitiveness, going to be a very big currency in post-COVID. So competitiveness and compliance will be a big currency, and really we need to prepare industries to be ready for that, whether it's through capacity building programs or the right policies being implemented. We know East Africa is not short of policies, but right now the government, because of the pandemic, is quite interested and willing to implement most of these policies and accelerate the rate of industrialization. Thank you.
Thanks very much, Joyce. Yeah, I mean, as they say nowadays, everything starts with KYC. If you don't have KYC, you don't have anything else. You just have losses and potentially you go to jail.
That's correct.
So, I'm sorry, I'm afraid we're almost out of time, but I do have time for just one more question. And I would ask everyone to give a brief answer if you can fit it into 30 seconds. But just to ask you, partnerships are crucial for getting through crises. We've heard a lot about partnerships today, but for you, what are, from your own perspective of where you work, what are the most important partnerships you're working on at the moment? The ones that are really going to deliver through this crisis? I wonder maybe if Graham, you could start.
For us, one of the biggest partnerships is working with Ripple and finding the alternative sources, for example, of the on-demand liquidity and the quick FX. And also finding people on the ground, manufacturers who you can trust and you can then refer on to other people as well. I think it's vitally important, again, it's part of the KYC understanding who your customers are, but also understanding that your customers don't only have the means to pay, but they have the intent to pay at the end of the transaction.
That's great. Thank you, Graham. Beautifully put. Patrick, your brief views on partnerships?
I'll start off by saying, number one, we must have very strong relations with the regulator, the Kenya Bankers Association, and the government, because through that partnership, we then develop a means and mechanics to support the underlying economy. That's number one. Number two would be partnering that with strong supply chains that would impact benefits to SMEs. Now, I spoke about that earlier, but providing linkages to multinationals and large local corporates to support their SMEs who are either their suppliers and their distributors, because those are the guys who are impacted at this particular moment. Lastly, I'd say partnerships with government so that we can take this into a longevity kind of a mode. Africa has the resources. East Africa has the resources. We need to look at regional blocks. We need to look at regional value add. And I think this is a time to spearhead that.
That's great. Thank you, Patrick. Joyce, I mean, we're talking value add, we're talking manufacturing. What are the most important partnerships for you at this time of crisis?
First, at the regional level, harmonization of policies and just looking at collaborative working around how to get out of this pandemic. If one country is slow, they affect our trade because we are already highly integrated. So we need to move together so that we can open up our skies and open up our roads and airs and the movement of people, especially in quite an easier way. So that's a strong partnership. The supply chain really has been emphasized, but at a local level also with government. And we've seen the partnership that has happened now between the private sector and government, one of which has been very strong is the COVID-19 fund. And if you look at the number of industries that have contributed, is quite high. So we've seen a lot of industries coming out to give money to support the entire COVID response campaign in the country. We've seen a lot of industries also, putting aside some of their production capacity to produce PPEs and being innovative around making sure the country has enough supplies because of the shortage of supplies in the country around health issues. And so the response we've seen has been huge. Of course, the other partnership we need is with development partners, the likes of Afri-Exim Bank and other banks, and also regulators to help us come up with new standards for the new products that are coming up. And we've seen some of our standards bodies still having challenges. So industries and regulators and government working very closely to face this new ways of doing things, and of course, post-COVID kind of thinking and innovations. Of course, the last partnership is international relations. We know there's possibility of a lot of isolation policies and protectionist measures, but we still need a lot of a big, robust strategy on exports. So we need to find ways of, trading with competitive and comparative advantage in mind, and supporting each other to strengthen the supply chains and just trading policies that are conducive. There's so much in partnerships, but I'd like to listen to the rest. Thank you.
That's great. Thanks very much. And Eric, if you could briefly, final word on partnerships.
Yeah, it goes without saying, we can't win, no entity can win this battle alone. Aside those initiatives that I indicated earlier on, like the Patimfa and the rest, that are even being promoted at the level of the AU, which means we are working with the regulators, with governments, the central banks. What we are also doing, the African Export-Import Bank president is holding like a call with the CEOs of corporates, key partners like financial institutions every 2 weeks during this crisis. I'm sure everyone on this call, if they can reach out to me, I will extend that invitation. What we are doing is to hear from them what is actually going on, where are the challenges, and how we can partner and provide solutions. So we are going to continue doing that all through the crisis and beyond the crisis. So that partnership with financial institutions is key, partnership with corporate is key, partnership with government is critical. All of this will help us stand together and win COVID-19. Thank you.
That's great. Thanks, Eric. I mean, as they say, competition makes better products, partnerships make better companies. And I think we will all be better off if we have more partners and if we continue to keep calm and communicate. So I'm afraid that's all we have time for on our panel. Thank you very much to my panelists, Patrick, Graham, Eric, and Joyce. And it is also time to wrap up the webinar as well. Remember, today's webinar is part of a series focusing on trade in the new normal. So please watch out for future webinars coming soon. The GTR US 2020 edition takes place later this month, and more about that will be announced. And full details of upcoming webinars and the full event schedule can all be found on the website. I hope very much that I will be able to see all of you at GTR Africa 2020 in Nairobi on the 1st and 2nd of October, so we can continue this discussion. Thank you very much for listening, and stay safe.